All righty, folks. It is Fed week. We are going to get the Fed rate decision. Will they cut? Will they raise? Will they stay on hold? But I think the most exciting thing will be the press conference. We're going to have a conversation with Taylor from LifeGoal Investments and see what he's expecting out of Fed Day. Taylor, what say you?
Well, is Jerome going to bend to the pressure of Washington, D.C.? What's interesting, I thought, is that there's been a lot of pressure. And as we know, the market has been overly optimistic historically about whether the Fed was going to cut or not. But as of this morning, when you look at the betting markets, what is being priced into the market right now is only a 3% chance that we get a cut on Wednesday. So it looks very, very unlikely. And Mr. Trump is going to pound his fist again if we don't get a cut, which will be interesting to see the little fireworks played out there.
Yeah, so I did not check over the weekend because I knew we were going to talk, but I think the odds heading into Friday's jobs number, so pre-rollout, so call it Thursday, we're still for 4 rate cuts and for them to start in June. Have you? It's got to be less than it can't be 4 rate cuts anymore, can it?
Yeah, I'll pull it up right now. I don't know. So by year end, you were saying they were forecasting 4 cuts. Give me just 1 second. I'll grab it here. By year end, they're forecasting in the highest likelihood 3 cuts.
Okay. So we're down 1.
Yep, down 1. And again, to your point, like that was, let's not call that a strong jobs market. We're going from an average of 250 to 150-ish. But nonetheless, it was much better than the anticipation going into it. So that is why you had 1 rate cut pulled off of the markets, what they think is likely by the end of the year.
Yeah. When does FedWatch say that the chance of the first cut? So I know May is 3. Is June like 20%?
No, June, last I checked, was above 50%. Yeah, so June right now is so even June has come off. So June, there's a 70% chance of no movement in June, and then a 28% chance of 1 cut in June. Yeah, so where does the likelihood actually flip to being more probable of a cut? You're correct. July goes above. It's at 55%.
All right.
So listen, the market is even telling us no rate cuts are coming. They're listening to what Jerome Powell and company are saying. I'm actually shocked. I hadn't looked at the future dates like that. I'm actually shocked that June was, prior to last Friday's jobs number, was over a 50% chance.
It was. Yeah. So it's down now. So one of the things that I'm starting to share with my channel on the daily financial news is, frankly, I think the Fed is wrong and going to be late. I think the Fed is too focused on tariffs. And what I mean by that is they're only seeing the inflation upside.
Right. I agree.
But where they're really wrong is they're not anticipating the deflation that's going to come from demand destruction. I do not see the American consumer being okay with another 10% rise in prices.
Agreed.
And I really believe that deflation is going to be something we talk about, certainly in certain segments of the economy, but could be the real problem come August, September, November, in there. I really think the Fed doesn't get it. I think deflation is a bigger worry.
I agree. You and I have both been talking about this, that we see, okay, yes, logic states that when a tax on a product comes in, the cost is going to go up to the consumer. Like, we understand that the cost of goods is going to go up, right? Mm-hmm. But the problem is then when the cost of that good goes up and it is no longer consumed because the price is too high to be affordable, then you have a lack of demand on that product. You have demand destruction, as you've put it correctly. And then all of a sudden the price does not remain elevated. It comes back in, and maybe the corporations are taking a margin haircut or whatever it might be. But there are different levers that can be pulled there, that all of a sudden we go from, okay, it was economies hustling and bustling and people competing for goods, which is what we saw in 2022 and continue to see with the modest level inflation that we have now, to, okay, bang, you get a one-time price increase or even a persistent price increase, which hopefully that doesn't come. And then it just becomes unaffordable, and you start to see the deterioration of demand, and thus prices don't go higher. And I think that if tariffs stay on for a prolonged period of time, I think that you are very, very correct in that assertion.
Yeah, one of the things that I learned from economics 101, stuff was demand, and most people don't get this. Demand's a two-step function, right? You have to be willing and able.
Right.
Right? That's an important distinction, right? Everybody, all guys want a Ferrari, but most of us aren't able to pull that trigger. Right. So that's the problem I see going forward, is the Fed is just missing the fact that a lot of consumers will, A, not be willing to pay the higher prices, and B, a lot of us won't be able to, even if we wanted to, right? We just can't afford that extra 10% because everything is so ridiculously more expensive these days. So again, deflation.
I agree with you. And so I'm going to put words in your mouth. You can agree or disagree. If you were in the Fed, you would be cutting now.
I would certainly, I don't know that I would cut in May. Let's be fair. But I would certainly change my talk track.
Yeah.
My talk track of inflation's the problem, on hold for longer, this, that, the other thing. Again, I don't think I'd cut in May. I don't think it warrants it yet. But I certainly would. I would tell the people, I'm looking for this. We're concerned about this. None of them has said deflation. Now, maybe that's, a Fed code word that they're never supposed to say, like the boogeyman. Right?
Oh,
You
yeah.
don't say that word.
I agree with that sentiment. Don't say that word.
Yeah. They're like, the Fed never says this word,
Right.
but they could say demand destruction. They could say things like that. And I think that's important. And I just see them missing the point.
I think what you've seen is the movement in the 2-year Treasury has alluded to the fact that, okay.
Oh, yeah. Scott Bessent. Yeah. Hammered him. Scott Bessent, I think it was last Friday, basically said, dude, the Fed, you're out of touch. The 2-year note's below the Fed funds rate. What the hell are you doing?
Correct. And the person that has been, Bessent has come in line with this, but the person that's been pounding the table on the 2-year being more indicative of what the Fed's going to do than anything else is Jeff Gundlach. And he's been speaking to that now for 2 years in a row. And he's been right. It's been directionally correct. They have been following very closely the footsteps of that 2-year Treasury. And I think that if it was me, again, without the thought of like, all right, what does it do to the markets? Without that thought, put that aside, I do think that a cut is warranted now. I think you need to get ahead of this. I think that, again, the demand destruction that will take place in all likelihood because of the tariffs warrant a movement now. And when you look back to just the last tariff bout that we went through with Trump in 2018, what you had was a modest tick up of inflation. And granted, these were not far-reaching tariffs. These were much more isolated. But then you had inflation come down, and you also had GDP come down. So that's both sides of the mandate, right? GDP isn't necessarily the mandate, but that is indicative of the economy. If it's growing or shrinking, directly leads to employment. So if you have GDP coming down, that means in all likelihood unemployment ticking upwards. That's the recipe for a rate cut. And I think that it probably is warranted. But he needs to start messaging, in my opinion, this time that we aren't just going to be. The problem is they are so darn data dependent.
Yeah.
They need to see
Stop looking at the rear view mirror, dumbass. Look outside the windshield.
Correct. And I think what it does when you're data dependent is it eliminates, it gives you an out. It gives you an off ramp.
Well, that and you're always late. You just, by definition, you're late.
Correct. But it's justified, right? Every decision that you have is justified at that point. Because I will tell you this, like, runaway inflation is nasty. And we went through this in the 70s, right? And the 70s had oil that we don't have now. That will not be a problem because we are not oil independent. Let me be clear on that. But we are less dependent upon foreign entities for oil. But we cut too soon. Nixon forced Arthur Burns to cut. And Arthur Burns cut, and then inflation retook hold and accelerated then, and we had to do nasty things to control it. So I know I'm talking out both sides of my mouth. I don't see that in the cards. So I think that a cut is warranted. We aren't going to get one because it would shock the market, and then it would start to look like Jerome Powell gave in to, as an independent entity, gave in to political pressures.
Yeah. Again, I don't see a May rate cut, but again, to your point, I think I would start changing the message. And the message would basically be, we're ready to cut because of demand destruction. And if tariffs aren't resolved at some level, a June rate cut would make sense to me, right?
So
basically buy 30 days.
Play that out in your head, though. So all of a sudden now, Trump wants him to cut. He says, I'm willing to cut because your tariffs are going to cause me to cut and demand destruction. So like all of a sudden now we start this new eruption of battles between, wait, now you're telling me my tariffs are bad for the economy. It's just, that's one of the things that like the tweet by tweet world that we're in right now. It's, you get yourself backed in a corner, and then it makes it tough to make things not be political. And then when you say something else, now you're going at the political agenda. It's a nightmare.
Yeah. At the end of the day, if I were to summarize today, I think the Fed is too data dependent, and they're going to be late, and there will be plenty of pain caused because they're late.
Yeah, I tend to agree. I hope that we don't have the pain, and I hope that we can resolve some of these tariffs to allow us not to experience some of the pain, and therefore the late nature of theirs doesn't come to fruition as nastily. Yeah, that's a word.
Yeah, it is now.
But yeah, you get the point there. Hopefully cooler heads prevail here.
There you go. Well, do me a favor. You put out 60-second amazing videos. Where can people find them?
Yeah, thanks so much. Find us at LifeGoal Investments. That's our handle. We're on both Instagram, on TikTok, on LinkedIn, etc.
Very cool, man. Thanks. Have a good day.